If you want to know what the best property investment today is, then welcome to the future of high cash flow property investing. My name is Peter Sun, and I'm going to reveal to you why Australia's top investors are ditching duplexes and houses for these high cash flow gold mines. Now, there is two reasons why these are the best investments. Number one, cash flow. You can get anywhere from 8 to 16% yields and returns with these types of properties. And secondly, is capital growth. So we've seen capital growth increases from 200,000 to 350,000 and even higher than that once these properties are built and tenanted. So what it really means to you is that you can turn a $300,000 investment into a $1 million or more profit from the income and capital growth in just 10 years. And you're getting $200 to $600 per week net income after all costs once these properties are built and tenanted. Now, let's talk about cash flow. So these are actually 5 to 9 rental incomes from just one property. And basically, if you look at the Queensland 5-unit design, this is what they look like. So you've got a lounge area, you've got a kitchenette in there, you've got a separate bedroom, you've got a bathroom and a courtyard, all encompassed in one rental unit that you can rent in that property. And now then you've got a second one, which is identical, third one, fourth, fifth. So you're getting 5 incomes from the one property, and you've got a common area in there as well with a kitchen and a share laundry for the tenants to use. And of course, there's some car parking there as well. Now, if in Victoria, you can actually have up to 9 studios, which equals to 9 incomes. Right? It's a very good market there at the moment for these types of investments. Once again, you've got the living area, you've got a kitchenette, you've got a separate, ensuite bathroom, and then you've got that in the second, third, fourth, fifth, sixth, seventh, eighth, and ninth studio unit, all in the one property. 9 incomes, 9 separate studios with separate entrances and so on. There's also private courtyards that these properties have. And there is, again, a common area with a kitchen and a laundry, right, that the tenants can share, but they virtually never do share the kitchen because they've got their own private kitchens inside their studios or their apartments. So let's have a look at the type of income these properties are getting. So this is a property that was constructed in Melbourne in Victoria. It's getting $3,150 a week, fully tenanted, 9 units at $350 a week each. And 2 houses in the same suburb will not give you the same rent. If you have 2 normal properties there, you'll get $1,030 per week. This is right now today. I've done the analysis of the rentals in that area. Now, the one on the left actually is fully furnished as well, includes all electricity and all costs. So it's a lot more convenient from a tenant's point of view. There's another suburb, Werribee. Don't know if you know that one, but again, multi-unit, 9-unit occupancy property, $2,500 a week rent. A house in Werribee, which actually looks nicer than the 9-unit one, if you like that style, and it's only getting $650 a week, right? And it's got a garage and everything, and yet the rent is it's like night and day. So Queensland, same thing, same area, different returns. This is a high cash flow unit to $2,519 a week. It's getting right now. Normal rent in that same suburb, $990 per week. It's a suburb called Deagon in Brisbane in Queensland. So let's have a look now at the capital growth. I hope by now you can see that the rental income of this is absolutely, fantastic. But what about capital growth? I often get people asking me, will these actually grow in value? Well, that's the good news, because a non-studio co-living with 9 units in it just sold for $500,000 profit for the investor once it was built in a suburb of South Melton in Melbourne, on the outskirts of Melbourne in Victoria. Now, before, the investor invested $1,100,000 on an empty block of land to build this property. The expected yield was about $147,000 per year in income, 13.4% return. After just sold literally 2 or 3 months ago, it sold for $1.6 million. And at the moment, the Victorian market is the worst in Australia. So there's been a $500,000 capital increase on this property, right? Because of the income that it's getting. There you can see it sold in June 2025 for $1.6 million. That's the actual screenshot of the national database of properties sold in Australia. It sold on the 16th of June 2025. So same thing in Queensland. Off the plan, this property was sold for $1,080,000. That house was going to be knocked down. After, it's giving a $270,000 profit to the investor in just 11 months because this one was actually sold as soon as it was built. But if you wanted to keep it, you're getting $98,000, almost $100,000 a year in rent. And it sold for, in 2024, $1,350,000. Now, Bald Hills, this is where this property is, right? Normally, those rents are about $750 a week. This property is getting $1,900 a week. So it's in Bald Hills in Brisbane. So you can see that, again, this type of investment is good from the investment point of view for returns. And if you want capital growth, it's also got outstanding capital growth on top of that. This is another property. We've been just sold one of these off the plan in a suburb of Bonshaw in Ballarat for $892,000. Now, I don't know what it's going to be worth in a year or two once it's built. Well, it's going to be built actually before that. It takes about 8 to 10 months to build these. But the rent you're going to get is $91,800 per annum. Plus, you can get a 3% CPI or CPI increase, and the rent is guaranteed for 5 years. Right? What will that be worth once it's completed? Not that I would be selling it. You want to hold these properties for long-term, growth and also income. But you'll probably make $200,000 or $300,000 on that one as soon as it's built. So you can do this anywhere. Now, in that particular suburb in Ballarat, that property is getting $1,750 a week. The normal rent there is about $515 a week. Okay, let's have a look what you're going to discover in the next 17 minutes. If this is sounding good so far, then stay with me because this will be the most profitable time you'll ever spend. I'm going to cover why traditional property investing is not working for Australian investors right now, why the perfect storm market conditions are creating an unprecedented opportunity for smart investors, how to generate that 8 to 16% positive cash flow plus capital growth from your next property, and also the step-by-step formula to replace your income and retire financial free in the next 12 to 24 months. Plus, this strategy also works better in flat markets, recessions, and bad economic times, and why that is so, and I'll explain that to you as well. Before I do that, let me just cover a little bit about who am I, why should you listen to me? Look, I am not a spring chicken, as you can tell. I've been around. I'm not one of these 20-year-old kids that are telling you they own 10 properties and they can't possibly have bought all the stuff that they're telling you about. But I bought my first property in 1984, and I've purchased 25 more properties for myself since then. I've written and researched several books on this type of investing, including Boom Suburbs, where to find the next suburb that's going to go up, how to sell your house or rent your property for more money, and the latest one, Creating Wealth with High Return Real Estate, which is the one right here, which you can get also on my website. Now, I personally have invested in every type of property you can imagine, but I have never seen any property investment that performs as well as these multi-income rooming house cash flow gold mines, right? From an income point of view or from a capital growth point of view, without you obviously being like a full-on developer and building like a huge apartment block or something. Obviously, you'll make more money with that. But I'm talking about the ordinary investor can now literally, be getting the same kind of profit margins that some of the big developers are getting. And I've actually created a property developer masterclass on this topic. So I've actually done another video where I'm showing you how to develop these rooming houses from start to go, the exact steps to go through if you want to do it all yourself. But I'll tell you, it's a lot of work, so I wouldn't recommend it, right? But I've done that as well. I've created a training on that. So I'm currently assessing a block of land where I can build 2 of these high cash flow multi-income properties. It's in a suburb of Kurrajong on the outskirts of Melbourne. Right, so I'm looking at that. I've also been on site in Victoria. There you can see on this little video I'm just going to play for you. Behind me, you can see some of the land that's everything's pretty much sold out here, except for a couple of blocks. We've got one opportunity here with a rooming house, $1,750 a week rent. Most of these are going to be putting houses on them that you're going to get about $500 a week for. So you're getting more than 3 times the rent. Land in Brisbane, here's another video. So these are the kind of sites we look for. Across the road from me is a big block that sometimes we can cut that one into 2, and then we will construct a rooming house or 2 rooming houses on the one site, such as we've done on the one behind us here, this one's actually getting $2,100, $2,200 a week for 5 separate micro apartments within that complex. But these are the sort of land blocks that we're looking at actually. So I want to show you this because I want to prove to you that I'm out there doing it every single day. I'm not just here sitting in front of a computer screen trying to sell you a property, that I'm not doing myself. I'm investing in these types of properties myself, and I'm converting all my property investments into this type of property. Now, before I go any further, I just got to tell you that, look, I'm not a lawyer or an accountant, so make sure you seek your own legal and financial and accounting advice relevant to your personal situation before investing in any property. Look, all investments carry potential risk and reward. And if you get rich as a result of watching me on this video, then it's not my fault. It's because you took action, right? And you actually went out there and did something. So let's talk about why traditional property investing is dead in Australia at the moment. Look, it's kind of what we call the negative cash flow trap, because the average Aussie investor is literally bleeding $5,300 a year from their pocket on every single property that they're buying, right? Normally, you're stuck waiting 6 to 12 years before you see any capital growth. And yes, I know in the last 3 or 4 years, everyone's a genius in property, right? You got so many spruikers out there telling you, oh, we're going to make you this money. We're so good. All our clients are making money. That's only because the market's been going up, right? Pretty much everywhere except Victoria, right? But what you need to do is you need to learn how to invest smarter, right? Which is what I'm going to talk to you about later, right? Basically, in the past, people are working for their properties. Instead of your properties paying you, you're chained to your job because you need to cover the losses you're making on the properties that you've already invested in, or it's taking you like 5 to 10 years before they're cash flow positive. Now, you're also exposed to market shocks. So banking, on capital growth alone with a property leaves you vulnerable. If the interest rates go up, if you lose your job, then that can put you in a hell of a lot of trouble, and you can lose those properties and not make anything. And of course, your portfolio growth will depend on the banks lending you more money, which if the income's not coming in and you don't have the positive cash flow, they're not going to lend you more money to be able to buy more properties. It's not enough to actually then give you the positive cash flow. So look, in Australia at the moment, only 16% of Australians actually own an investment property. And the terrible, facts of that is that of those 16%, 50% will only ever have one property. And another about 40% will have 2 properties. So the people who own 5 or more properties, where you really you kind of sold that dream, or you got to own up to 5 properties, and over time they're going to go up, and then you sell a couple and you pay off your debts. Well, that doesn't really work, because less than 1% of all investors actually get to 5 properties or more. And the reason why is because the rental they're getting doesn't allow them to buy more properties, right? Because the banks won't lend you more money because of serviceability. I'm sure you've already experienced that if you've been trying to get finance and you're on a standard kind of a wage. So the other opportunity at the moment is we've got an Australian rental crisis. It's the biggest wealth creation we've had in opportunity in decades. And it's simply because we have a massive housing shortfall. The immigration's just been, out of control. We're 106,000 homes short in 2024. And the gap's projected to grow up to 175,000 homes by 2030. So we're building homes, but not enough to actually keep up with the demand. So only 120,000 homes a year are being built, when we need $180,000 plus annually just to keep up with the demand, right? And we're not doing that at the moment. Vacancy rates at the moment, they're at record lows. Major cities are all in a rental crisis. That's why the rents have been going up, right? Sydney, 1.2% vacancy rate, Melbourne, 1.4%, Brisbane, 1.1%, Perth, 1.8%, Adelaide, 0.9%. It's everywhere. Even the regional centers are seeing a real, rental crisis. Now, that's why the rents have been skyrocketing, and we've seen an over 57% increase in the past decade, which has far outpaced your wage growth. Your wages didn't go up by almost 60%. And you can see that article there talking about the rental affordability is currently the worst on record, with over 30% of income being spent on rentals for most people. And that's why these types of properties that you're going to discover on this video are the ideal solution to this rental crisis. So let's look at the old property investing model versus this new cash flow model, and let's just compare them quickly, right? So the old way was to focus on capital gain. And yes, look, I agree. In Australia, properties always go up. So it's a great idea, to invest in property. But you have to wait sometimes 10 to 15 years before seeing some real returns. I know people that have never seen, their properties go up because they had to sell them before they gained any value. So that's the first thing. Second thing is negative cash flow. You're losing on average of $5,300 per year on each property that you own, right? And you're hoping that the capital growth is going to counteract that. So basically, you got to keep on working just to prop up your investments. And you're exposed to these market downturns, interest rate hikes, as I mentioned before, and your portfolio is limited by the bank lending rules, as I've already mentioned before. Now, if you focus on cash flow properties, such as the ones I'm showing you here, which is what we call smarter property investing, then you're getting, number one, positive returns from day one. You're getting positive cash flow generating you anywhere from $10,000 to $30,000 a year and more. So you're getting $200 to $600 a week in your pocket from every property that you own. And that's after all costs and interest, right? So you can replace your income within 12 to 24 months with just one or two of these properties. You're protected against market shocks and interest rises because you can hold the property because it's making you money. And it's also easier to keep growing your portfolio because these properties are self-funding. So here's a case study, right? This is the old way of investing, which is a property in a regional town of Victoria. You can get $530 a week. You can see that it's advertised on realestate.com for $530 a week. And right next door, you can have another property that's making you $1,750 a week, which is 10% return, and it's guaranteed for 5 years. And there's actually me on site demonstrating that in the actual street. So behind me, I've got two properties in the same suburb, right? Now, this one is a normal house and land, which will rent for $500 a week. The one next door to it looks exactly the same from the outside. However, inside is 5 separate bedrooms, 5 living rooms, 5 bathrooms, 5 kitchenettes, 5 courtyards. And that one is going to rent for $1,750 a week. Now, from the outside, you can't see any difference. But the big difference is what's on the inside and, of course, the returns you're going to get. So one house, $500 a week. Second house, $1,750 a week, which is for this property right here. That is the difference between a rooming house and an ordinary investment. And this is guaranteed for 5 years. So the smarter cash flow solution is that you're getting positive cash flow from day one. So you're making the $200 to $650 and more per week in passive income as it's built. You only need 2 high cash flow properties to retire comfortably with this model, right? You can replace your income super fast. You'll have your financial freedom in 12 to 24 months, not 10 plus years. And you're protecting yourself from high interest rates rises, and your property stays profitable even if the interest rates do rise. And of course, if they're falling as they are at the moment, it's even better. You're making even more money in your pocket or paying off the debt that you have on the properties. You can scale your portfolio a lot faster because you can use the extra cash flow to self-fund your new property investments without having to rely on the banks. And of course, you're getting major tax benefits because you're saving thousands of dollars through depreciation while still generating positive cash flow, because these properties all have 5 kitchenettes, 5 bathrooms. They have a lot of fittings and fixtures that you can depreciate, giving you a much better tax deduction. And in Victoria right now, great news, there's something good coming out of Victoria, is that there's land tax exemption in Victoria, which helps you maximize your profits as well. So let's look at the rooming house versus the normal property cost comparison. So traditional property, you're investing, let's say this is a really cheap property, $750,000. Your rental income is going to be $605 a week, about $31,000 per year. Your gross yield is about 4.5%, which will give you about, let's say, 3.5–3% net yield. Now, after expenses, you have to pay at least $50 to $100 and even more per week negative cash flow. You got to pull out of your pocket every week and put it into that property and hope that it goes up in value. Now, if you invest in one of these high cash flow rooming house investments, your purchase price is normally a little bit higher because you got all the extra bathrooms, the kitchenettes, and so on. So you're investing between, say, $800,000 to $1 million, but your rental income is anywhere from $1,750 a week to $2,500 a week, and sometimes even more. Your gross yields are between 8% to 16%. So even it's like double the other property, and net yields are 6 to 11% as well. All right, so after expenses, you can make up to $600 a week positive cash flow. So obviously, from a investment point of view, it's a no-brainer as far as where you're going to invest. Now, if you haven't seen one of these before, this is actually me going inside one of these properties that's just been completed and doing a walk through the interior. So let's have a look at what they actually look like. Okay, here we are on the cusp of finishing another fantastic investment. Everyone is going to have their own self-contained apartment. Come on, come inside, I'll show you. The doorway, pin code lock, security minded. See, it works, talks to you. You've got a separate lounge room dining. So you've got a little dining area here. You've got a full kitchen, really good quality, plenty of storage for everything, right? Lots of storage. It's already equipped with all the cooking things, plates, everything's already there for the tenants. So they just got to bring their clothes. You've got a little lounge here, and they got their own private courtyard. Look at this. Most of our rooming houses actually have these kinds of courtyards where you can have a couple of chairs outside. They haven't come yet. And then you've got a bit of a garden area, but most of them have a outside area, the ones that we're doing, because we want to make sure that the tenant has access to outside. There's also a clothesline there that they can use. And then you've got the bedroom, again, very spacious and separated from the lounge room. Oh, look at this. Ceiling fans, reverse cycle air conditioning in the lounge room, mirrored wardrobes, triple mirrored wardrobes. There's another wardrobe here, lots of storage space. So people love this sort of layout rather than being cramped in a little bedroom with a bathroom, sometimes even a shared bathroom, some of the things that are being rented out. These can get you returns from anywhere from 8, 9, 10, even 11% in some cases if you invested in the right area. So these are the Queensland 5-unit rooming interiors. Now in Queensland, you cannot build any more than 5 units in one of these rooming houses. And you can also not have an area bigger than 300 square meters internally, which is the same in Victoria. But I'll talk about some of those details a little bit later. But you can get about $350 to $450 a week with this type of property. You can see you've got the lounge room there, the kitchenette's off to the left. You've got the bedroom behind there in a separate room. And then behind that, you've got the bathroom. And then, of course, you've got the courtyard off to the right as well. That's the kind of the plan, the floor plan of that type of property. Right, and you've got again the kitchenette is there. You've got the living area, the kitchenette, and then you've got the bedroom, down the bottom. So they're completely separate rooms, and the bathroom sometimes separates them, sometimes is at the end like the other one. But that's basically the layout in Queensland. This is another example of a 5-unit interior, just a slightly different layout. So you'll find that they, depending on the block of land and how it's designed, then you might have a different layout. So you've got a lounge room, you've got the bedroom behind there, you've got the outside courtyard that you can see quite a big courtyard off to the right there at the back, and you've got basically the bathroom, which you can't see in that particular shot. Now, surprise, surprise. Right? Not all rooming houses are the same. More attractive designs will sell and rent for more money. That goes for Queensland, goes the same for Victoria. It'll go the same for anywhere you're building these. You can get these in Perth now as well. So in Queensland, there's an example of luxury rooming interiors. Now, these will rent for $450 to $550 a week, even as much as $600. And have a look at how beautiful that design is. You've got a lounge room there. You've got the bedroom behind there. You've got an outside area. You've got the kitchen there, or kitchenette with a full-size fridge, right? They've got microwaves. They've got, like, you can put an air fryer there. The bathrooms are large with nice big vanities, right? And these will rent for more money. It's basically like a luxury hotel suite, if you like. That's what I kind of compare these to. Imagine if you spend, if you want to rent somewhere and you can get a luxury hotel suite for literally less than one night in a hotel, in a hotel room, right? So this is another example of that luxury design. Again, lounge room, bedrooms at the back there. You've got the kitchen there, kitchenette, and you got the outside courtyards. Now, these ones also have a TV in the bedroom, in the large room. They're fully furnished with really nice looking furniture, right? The bathrooms are spacious. You've got lots of storage space, vanity space. And here's an actual walkthrough of one of these properties, that have been built in Brisbane, which actually sold for $1.6 million and is getting in excess of $130,000 a year in rental. Very good front from the house. It's got its themed inside, Las Vegas style. This is the common area where everybody can use. That's the kitchen and the laundry area. All the tenants will share that. These are the actual individual units, and there's the hallway that leads to the individual apartments. Have a look at that beautiful furniture. Separate toilets, beautiful lounges, custom designed furniture, absolutely beautiful inside. These are not just a cookie cutter type projects. These are actual works of art. They are all soundproof with 13 millimeter, thick walls of acoustic quality they use in recording studios. You've also got, the fittings are, all bespoke fittings. You've got beautiful furniture in there. You've got full-size fridges in every apartment. So you can see large beds, study desks, outside areas and courtyards. But for every tenant has access to that. There's the kitchenette, big benches, full-size fridges I mentioned before. All the insulation is also recording studio quality. Air conditioning in every room. And it's also got a special electricity saver on each air conditioner so that your electricity costs will go right down. And again, there's your outside area. This is the best investment you can make. Pretty amazing property, isn't it? So now let's have a look at Victoria. Now, Victoria, you can have up to 9 studio interiors, and these are $220 to $300 a week rent. So the rents you get there are a little bit less, right? And these are the basic kind of designs that are out there at the moment that people are selling. And as you can see, that's not a really attractive design, but it'll still rent between $220 to $300. It's got a little kitchenette. It's just have a bar fridge normally, so it doesn't have a full fridge. It might have a TV on the wall, but it's a pretty basic kind of layout. And the bathrooms are normally quite small as well. So then the difference between that and this luxury interior, it'll rent for $280 to $350 a week, so you're getting substantially more rent. But look at that design, right? Look at the kitchen, right? Again, full-size fridge, much more appealing, for the tenants, right? Plus, there is a nice outside courtyard as well, a very sizable courtyard there. And so these will rent for more money, and I'm sure you can see why. Here's another one. It's the same furniture I actually used in a unit on the Gold Coast that's now selling for over $1 million, just a 1-bedroom apartment. And I use exactly the same type of furniture as these rooming houses have got there. And again, you can see a spacious shower there, lots of nice vanity mirror, plus lots of storage space in that bathroom. In Victoria, here's some examples of actual properties that have been converted or knocked down and rebuilt. This one was getting $25,000 per annum rent. It sold in January 2021 for $700,000 with a 3.5% yield. After this 9-unit property was constructed, $131,000 per annum it's getting in rent, and it's now worth $1.6 million. It sold in 2024 with an 8.1% yield. So again, it's like night and day. I'd obviously much rather have the property on the right, and I'm sure you would too. So let's look at why traditional housing no longer fits today's reality. Well, one of the things that's been happening in the marketplace is that single-person households are exploding, right? Back in the 1960s, you'd have about 10% of people being single renters. In 2000, it was 19.3%. In 2010, it jumped to 24.3%. And today, you got around 32%, or 1 in 3 households are basically single renters. So we're not talking, in a lot of people used to have a negative connotations about these rooming houses, like these old boarding houses where kind of lower socioeconomic type, rental market. But these are actually aimed at a much higher level of tenants. And I'll talk about it in a minute, because the question I often get is, how hard is it to get tenants for these properties? And it's actually very easy, because these are affordable rents. They're all inclusive. The properties are fully furnished. They include electricity, Wi-Fi, so you just walk in with your clothes. And because of the current housing shortage, these are very much in demand from those single person renters, rather than sharing a house like a 4-bedroom, 2-bathroom house that is not designed for this purpose, right? And that's why they're getting such great rents. Look, there you can see that property that I mentioned before in Melton South in Raymond Street. It's renting for $350 a week. That's an actual ad from realestate.com that was out there to rent one of the vacant units in that 9-studio property. So who are these ideal tenants? Look, as I mentioned, these are professionals, healthcare, emergency workers, essential workers, divorcees. We've had lawyers, we've had doctors renting these these properties, right? And notably also single women aged 50 plus. Also the elderly are now finding these are very attractive because, again, affordable, all inclusive, you got privacy, they're nice designs. So they are, they're very, very appealing. The way it works is every resident signs an individual lease agreement, just like any other rental property. It's normally for a 6-month or a 12-month lease, just like you have with a normal rental. But what it does is includes electricity, Wi-Fi, and also cleaning of the common areas, which the landlord takes care of. Now you can see an ad there, an advertisement on the bottom right. It's in Brisbane, and there's 5 micro apartments that are being advertised for $510 each a week for one of those, 1 bedroom, 1 little bathroom. And this one obviously just got a balcony and a separate lounge room apartment. So I guess you're wondering now, what are the costs to run one of these? I've showed you the income you can make, but what is it going to cost to run one? Well, there's 2 costs you've got to take into account if you want to invest in one of these. One is the letting and rental management costs. And the second one is the regular outgoings you're going to have to pay for. There's an example of a 5-unit one. I'll run through that in a minute. So the letting, rental, and management costs is basically the initial letting fee is 1 week's rental. It covers the lease preparation, inventory, condition report, the inspection of the unit initially, and so on. And the management costs normally are between 7 to 10% plus GST off the rent collected, depending on where the property is and how many units it's got in it. And this will include your rent collection, regular inspections, your monthly statements, plus end of the year financial statements to you as the property owner. Now, the regular outgoings, these include things like electricity, water rates, cleaning, garden maintenance, insurance, internet, and so on. And normally, the total costs deduct about 2.2 to 2.3% from your gross yield, or 21 to 25% from your gross rent received. So if you imagine if you're getting $100,000 in income, just to make it easy, roughly $25,000 will be your costs. So you'll end up with $75,000 net in your bank account before interest, right? Now that and depreciation. Now on the photo there on the right, you can see this is for one of those 5-unit, $91,800 rental properties, and the cost will be $23,000 to run them. So you'll be getting about $69,000 in your pocket after all costs, excluding interest from that type of return. And that's where you're getting the 10% guaranteed return on those properties as well. So let's just look at this as a summary. The total cost for a 9-unit property. So let's just make it round figures. $150,000 is your gross rental after some vacancy factored into it as well. Your management costs will run at about $15,000. Your outgoing costs, your electricity, your insurance and so on, $26,000. Your total cost is $41,000. So your net income is $109,000 a year, and this is before interest, of course, but that's a very, very good income. If you can manage to have one of these paid off, you can certainly live well on that, which is a 10 to 11% net return. Now the 5-unit property, you're getting around $91,000 per annum rent. The management costs are $7,000, outgoings are $16,000, total cost $23,000. So your net income is around $68,000, which is 8% net. So again, depending on your budget and your risk profile, because the 5-unit properties actually come with a 5-year rental guarantee of 10%. So again, the other one, it's just rented on the open market, and the other one is actually rented to hospital workers, people that, doctors and nurses. So there's an arrangement for them to be able to renting these properties. That's why they have a 10% guarantee. So this is before in Queensland, $25,000 a week rent, sold in 2022 for $695,000 in Boondall in Queensland, in Brisbane. After that property is getting $132,000 per annum rent, and it sold in November 2024 for 1.6 million, showing a very, very good profit, capital growth, plus an excellent income for the investor. This is the Boondall area rents comparison. That property is getting $25.40. A normal house in the same area is getting around $950 a week. So you're getting roughly 2.5 times the standard rental for that particular suburb. Now, before, another property in Dulu Street, Deagon, again, a suburb of Brisbane, sold in 2023. The land was $475,000. The build cost was $600,000. So the investor paid $1,075,000. After, the property is getting $131,000 in rent. It gave the investor a $345,000 profit because this particular investor sold it literally as soon as it was built. They tenanted it, got the rent for a little while, and then sold it, and made $345,000 in profit as well as the rental income. I mean, imagine if this was your portfolio, just 2 properties give you a huge $261,000 net per annum. That's $5,019 per week just from 2 of these properties. You don't need 4 or 5 properties. 1 or 2, and you can be set up for life and set up for your retirement. Right? So here's again a comparison. I'm actually on site in a street where there is a normal house being advertised for sale, right, as an investment, and then there is going to be a rooming house built a few doors up. So let me explain the difference to you between buying an ordinary investment property and a rooming house property. The property behind me is only 4 bedrooms, 2 bathrooms. It's a normal family home. And yes, you could potentially rent each room out at a time. However, it is not designed for that purpose. Now, you're going to be paying around $80,000 to $100,000 less for that property than for a rooming house. However, you're only going to get $500 a week rent for that property. Now, you buy a rooming house that looks exactly the same from the outside, and it's probably the same square footage inside, but you're going to be getting $1,750 per week. Now, you're paying around $100,000 more for more than 3 times the income, and of course, you're getting 5 bedrooms, 5 bathrooms, 5 kitchenettes, 5 courtyards, and a common laundry, kitchenette, and a kitchen area for the tenants to use. So it's a much better proposition from an investment point of view, and these properties, once they're finished, are also worth more money as well. But this kind of property, you get no returns, and the capital growth is still going to be there for both of them, because as prices go up, land goes up, all the properties are going up at the same time. So that is the difference between these 2 types of properties. So let's just recap. Who benefits most from a rooming house investments? Look, if you want a higher return and you want to get capital growth from your current equity or cash, this is a perfect investment for you to make. If you have cash in your super and you want to get safe, higher returns and capital growth, then talk to us. We'll show you how to set up your self-managed super fund and invest in one of these, cash machines. And, if you want to retire and you want to retire faster on a good income, or you want to pay off your home mortgage faster and pay less tax, these are the perfect investment. As I said, I'm selling my couple of investments that I have where I was Airbnb a couple of properties. They're a lot of work. We're selling them and we're investing in these types of properties for our future retirement with me and my wife. So let's just summarize what you've just learned in the last so many minutes. You can retire in as little as 3 years if you take action today. You don't have to wait 10 or 20 years. That's the first lesson you should take out of this. You don't need to own 5+ properties. 1 or 2 of these high yield investments making $1,750 a week or more a week each are enough, especially if they got the rent guarantee. Within 3 to 6 months, you can start with one of these properties and build a positive 8 to 16% yield, cash flow positive portfolio. Now, we also covered that demand for affordable housing is currently at record heights, right? There's no end in sight to the demand for these types of properties. So it's a very, very good time to invest in this. You are literally, they're not going to be hard to rent. That's what I mean. There's been a lot of other types of property investments in the past, like NDIS, the government you got to deal with the government and it's hard to get tenants. These ones, you advertise them like a normal rental, and they're easy to rent out. It's not a fad. Hundreds of investors are already using this strategy with great success. We're at the start of a 10-year extreme cash flow trend, and you can be one of the first people to jump in on this type of property investment and actually benefit, from the cash flow and the capital growth you're going to get. And look, if these are designed as tenant centric, so they're designed with the tenants and affordability in mind, right? And the more appealing the designs are, the more money you're going to make. And those are the types of properties that we're designing for our customers, and I'm doing that for myself as well. So, is today the best time to invest in a rooming house? Well, actually, it's not, right? Because it's the second best time, right? Today in Queensland now, you're getting about 7.95%, and in Brisbane now, you're looking at least 1.4 million, to buy a rooming house, right? The best time was 3 or 4 years ago, even 1 or 2 years ago, because your returns today could be 18% plus on the prices you were paying back 2 or 3 years ago, right? Today, right? This is an example of that, right? That was in 2024, you could pick up one of these rooming houses in Brisbane and get a 10%, 10.5%, even 11% return. It is no longer possible in Brisbane today because prices of land have jumped up too much. The building costs haven't jumped, but the land costs have gone up. So it is the best chance to invest right now in some areas in Australia, such as Victoria, where you can get these 10% yields plus CPI increases, guaranteed for 5 years. That's $91,500 per year rental from just $890,000 investments. There is some of those that are still available. And look, as soon as they become available, they go. But if you want to, have a look at one of these, then I can give you some information on how to do that in a minute. But as you can see there, you're getting $1,750 a week cash flow, guaranteed for 5 years. The nice studio investments can get you up to 14% yields and even higher in some cases. But of course, you don't have the same guarantees as you do with the other ones. But time is running out. So if you're going to do something, just have a deeper look at this, right? Give us a call, right? Do something about it, because the time to invest is now before prices move even higher and the returns drop again, and you're going to have to wait another 10 or 15 years for the next real estate cycle to move it up. So the next steps from here, look, get your questions answered to determine if a rooming house is a good investment and good solution for you and your goals. We can determine your financial capacity, whether you can afford one of these or what you can afford, whether you want to do it in or out of your super, right? We've got some fractional investments that become available every now and then where you can invest from just $70,000, right? And that's an alternative if you don't have enough money to buy one of these as a whole property, but we can again discuss that with you one-on-one. The next step then would be, complete an expression of interest and authorize a $500 fully refundable holding deposit. Now that is simply so that when I go to a developer and I go looking, for the next package that they're putting together with the land and the property, that I can say I've got somebody who's serious about doing something. If you then decide to invest, then of course that'll be refunded against the purchase of the property. And if you don't invest, then you get that money back. Now we're going to research the market for the most suitable rooming or co-living property that's available or upcoming in the area that you prefer, and come back to you with the best options available in your affordable price range. So obviously you've got to be able to afford, what's going to be offered to you. So we can also make an appointment with a specialist finance broker to determine if a rooming house investment is feasible for you, and give you access to our specialist rooming house property solicitors, accountants, tax specialists that can assist you in setting up your self-managed super fund if you need to do that. I've had my self-managed super fund set up for years, and look, it's the best thing I've ever done. I'm at that retirement age, and all my income from my properties, all my capital growth is tax-free on the ones that I've invested in my super fund. So it is a good option to have a look at as well. You also get access to all my books, my webinars, the hot suburb reports, and high yield property updates that I put out. And once you decide, look, on a suitable property, then we'll actually have to reserve it with the developer and secure the land and also get the building contract. So there'll be an additional $2,000 deposit paid to secure that property. That amount could vary depending on the property. and the builder and the landowner then will generate the relevant purchase contracts in your name, and they'll walk you through the supporting documents. You got to give your identification, your license or your passport and so on. Now, once you're happy and it all makes sense to you, then they issue the contract documents for you to sign, either electronically or in person, and you then transfer the balance of the deposit due to complete your purchase, either through equity release or cash if you got the cash. And the construction will commence as soon as it's all finalized. On average, you can expect these properties to be completed within 6 to 8 months from the date of the investment, and when the building is actually, once the contracts have been issued and the building approval has been granted to proceed with the building. It takes normally 6 to 8 months, and there's another couple of months, in before that, to get those, to get all the paperwork done and so on. So the summary of the next step is, again, look, get your questions answered. Let's find out how much money you have or what you can afford. Submit an expression of interest with a $500 refundable deposit. We'll come back to you with some options. If you like some of those, then we'll also set up an appointment with a finance broker, a solicitor, accountant. Set up your self-managed super fund. You can access all our tools. If you pick a property that you like, then you need to pay the additional deposit, which will go to developer. That other $500 will be refunded to you, and you will now secure those properties. They will issue the contracts. You sign those, and you pay the full deposit, and the construction then commences from there. So look, the next step is, whatever you do, book a session with myself or one of my team, right? It is really the best investment you can make. I'm all in on these properties, right? I'm literally selling everything and I'm investing in these properties because I know that I have seen just how much capital growth they've been getting, and also I know how quickly they're renting. I talk to all the property managers, I talk to all the real estate agents around Australia, and I get that constant feedback about what type of property investment is the best, and this currently is the best investment you can make. So whatever you do, if you can afford it, don't hesitate, right? Give me a call, right? As I said, I've been around. I'm not some young whippersnapper that's just telling you that you're going to make millions out of property. I've been there. I've done every type of property imaginable, right? And as I said, without you actually doing all the hard work of becoming the developer and land subdivisions and all that, this is the best investment you can make today. So I hope to speak to you again soon. Watch some of my other videos if you want. Learn about this investment, and I'm sure you're going to be as excited as I am. And I'll see you on my other videos, or I'll give you a call and talk to you on the phone. Have a wonderful day.
Hey there guys, John Gian here. First of all, I want to congratulate you for actually turning up today. You know what, success is really easy. You just, sometimes you just have to turn up. I first had the opportunity to bump into some of Peter's information about 12 years ago, and since that period of time, the revenue that I've generated, I can attribute to those early beginnings with Peter, which is in the multiple millions of dollars. If you really sit there and can get it and see how it applies to your life, let me say this to you. I know this is going to be a big statement, but you will never be broke again. If you really sit there and you embrace this information, that's a big call. You'll never be broke again. What Peter's techniques has enabled me to do is grow a really quick business, fast profits, and then I've rolled that into real estate. So I've had the opportunity to live an amazing lifestyle, travel first class, 5-star hotels, latest model Mercedes, live in multi-million-dollar homes, but still have enough money to put into real estate and build a massive real estate portfolio as well. So my system is business, put stuff into real estate, right? And that's how the billionaires do it, the multi-millionaires do it, and that's how I suggest you do it as well. So thanks for giving me the opportunity, Pete, to shoot this video.
Hi, my name's Nessie Rose, and I'm a single wage earner for whom property investing was a bit of a scary experience for me. I've known Peter Sun for over 15 years. Peter has lots of experience in property investing for himself, and this really helped me making my first property investment a lot easier. I was really hesitant. I had no experience in property investing myself, but now I've made over $350,000 profit in less than 4 years, and I am so looking forward to buying another one soon.
I've been following you for quite a few years, and like most people, I want to be able to retire comfortably and get the best returns on my investments. I'm actually looking to purchase another property that offered basically high returns and capital growth, and so sort of served all those main things for me. One was affordable, good returns, and good capital growth. And I can see where those properties are located as well. Like you showed me on the map where those different properties were, so that allowed me to get involved with the process as well, which I liked. The information that you provided me was very detailed, which was great, because I'm that type of person to want to know more about something before I invest in it.
Yeah.
Also, too, you've got a lot of property yourself, so that sort of made me feel more comfortable in the process. I've also bought property too, so I think it was a good match. And looking to get my investment back in 6 or 7 years.
The new factional rooming and co-living investments looks like a great opportunity for people starting out on their investment journey. My name's Shane and I live in Melbourne, and I've known Peter Sun for a long time. We met quite a few years ago and hit it off straight away, discussing real estate and real estate opportunities. Since then, we've bought properties in similar areas and locations, and I've continued to get advice from Pete ever since. So so he's got a lot of knowledge and a lot of books on investment that you could gain a lot of experience from him.